Hey guys, Dave Keller here with Market Misbehavior, and I'm often asked by viewers and readers how to learn technical analysis. I've been doing this for going on 22 years now, but earlier in my career when I joined the financial industry in June of 2000, I really didn't know much about technical analysis at all. So I'm going to share with you what I wish I knew 22 years ago about the 3 steps I would say you need to follow to learn technical analysis. So I'm often asked how to do technical analysis. How do you learn technical analysis if you're starting from scratch? What's really cool about the markets right now, the financial markets, you have an influx of new participants. A lot of people learning financial markets, learning equity and options investing, learning technical analysis for the first time. I think the challenge is learning it effectively and making sure that you have all the tools you need to not just make decisions, but to make good decisions. And that's what, with Market Misbehavior and stock charts and other things I'm involved with, we certainly try to do. When I was studying for the CMT exam, which is the Chartered Market Technician exam, it's sort of a professional qualification for technical analysis. In the early mid-2000s, my wife was studying for the CPA at the time, the Certified Public Accountant exam, and we were laughing about the fact that her CPA exam was very theoretical. She had to learn about legal requirements and consulting issues, even though she wasn't going to do any of those things. So it was not a super practical exam. At the same time, I'm studying the CMT, and I would be reading books and analyzing markets at night, and then go into the office the very next morning and be applying everything I just learned to understanding the markets on that day. I felt like the more I studied, the more I read, the more I used charts, the better I understood what was happening around me. It was a super practical exam, and I would argue a very practical toolkit to help investors make better decisions. So what we're going to do today is talk about the 3 steps I would advocate to learn technical analysis, and I'll point you to the resources I think you need to fulfill all 3 of those effectively. Before we get there though, if you like this sort of thinking about technical analysis, behavioral finance, investor psychology, and other things, I hope you'll subscribe to my channel. It'd be great to have you along this ride. Also give the video a thumbs up if you like it. We'd very much appreciate that back. Put a comment below. What do you find is the most effective way you have found to learn technical analysis? Let me know in the comments. Now, normally I would get to the charts. We're going to share some charts here in a little bit, but I want to start with actually a couple books, because the first of the 3 steps is to read. You have to start by learning the toolkit, and I would argue that following people who are just learning it now on social media and other things, that's interesting, but it's not really a great way to learn the traditional technical toolkit. I would go for timeless techniques and approaches that have stood the test of time. When I'm talking about the markets today, I still quote Charles Dow, who over 100 years ago was deciding or figuring out ways of analyzing trends and how to quantify investor behavior using analytical techniques that took stocks and put them in indexes and all these things that we take for granted now. It was over 100 years ago that he was able to do those things. So following in his footsteps, people like W.D. Gann, Elliott, who founder of Elliott Wave, John Murphy on intermarket analysis, Edwards and John McGee talking about patterns. These are all techniques that, while the markets have adapted, the markets have shifted, they're still sort of tried and true ways of understanding market dynamics. So the first book I ever read on technical analysis is this one, Technical Analysis of the Financial Markets by John Murphy. It's been an awesome blessing to get to know John over the years. I first met him at a CMT Association event, or the MTA is what it was called at the time, an event, and enjoyed getting to know him. And now at StockCharts, he's our chief technical analyst, and it's awesome to be able to follow his wisdom and learn from him, continue to learn from him. After such a successful career. But his book, which was originally called Technical Analysis of the Futures Market, was the first book I ever read. And the moment I started reading through the basic assumptions of technical analysis and how to analyze price and what price actually means, it just clicked for me. Now, as an undergraduate at Ohio State, I studied I didn't study technical analysis. I studied music and psychology. And so music is a different one, maybe a separate video. I'll talk about some of the relationships between music and the markets, because I think they're there. It's a very mathematical relationship, but it's certainly there. But in terms of psychology, I have always thought of the technical toolkit as a way of quantifying investor behavior, as a way of visually representing what investors are seeing and thinking. And I think John Murphy, better than anyone in the introduction to that book, it justifies why charts are a good reflection of investor behavior, of investor psychology, of the interplay between fear and greed, buyers and sellers. All of that is translated into the price of an asset. So at the very least, get this book and read the very beginning, which explains why technical analysis matters. And what's funny is as academia has caught up to this, as behavioral finance has become more widely accepted, as momentum investing and quantitative investing has become more and more widespread, it's all drawing on some of the insights that you'll get from John Murphy's book, to be honest with you. The other one I would suggest is this one, Technical Analysis of Stock Trends by Edwards and McGee, Robert Edwards and John McGee. What's funny about that book is one of my analysts when I was a managing director at Fidelity, worked for John McGee early in her career. Her first job in the financial markets was working with John McGee. And the funny story she used to tell is part of her job, John had ordered a special custom-made desk with a glass top. And part of her job was to feed the ticker tape into the desk underneath the glass top. So while he was sitting at his desk, he could watch the market sliding by underneath the glass top. What an awesome story from 50 odd years ago. Was her basically before computers, before Quotrons or Bloomberg terminals or whatever. That was the way you followed stock prices, and that was a real time experience of interacting with the tape with the ticker tape through the desk. Edwards and McGee's book basically talks about price action and particularly price patterns. So if you ever talk about a head and shoulders pattern or triangle patterns or pennants or flags, support and resistance levels, these are all really drawn from Edwards and McGee. And this was written many, many decades ago. And again, while the markets are changing, while the sectors and the dynamics and even the market structure is very different than what Edwards and McGee really knew, it's still very, very similar in terms of price reflecting what investors are thinking, how that translates into price patterns, and how to determine when a pattern is created, when it's validated, when it's failed, when it's broken. All of that I still draw on what I learned from Edwards and McGee. So honestly, the second book I read on technical analysis after John Murphy's book was the Edwards and McGee book on technical analysis, all in much later editions than the ones I use, but really well done. I have a link in the description below to my recommended reading list on my website. I encourage you to check that out. Those two books are on there along with another sets of books related to technical analysis, to behavioral finance, and also personal and professional development, mindfulness, which is super important to me as well. So step one is read. What you need to do is read those books. Look at how they were analyzing the markets of the current day when they wrote them. Think about how the markets are very similar because while the dynamics are a little bit different for sure, the market structures, the participants are all very different. Hedge funds weren't a thing when any of these guys were writing these books, but the idea of human behavior is consistent, and you will find all the similarities with any sort of bubble or crash or market dynamic now has its inspiration in what they were writing about. So read first. Step two after you read is apply. And this is an important one. Actually put this analysis into practice. Again, when I was studying for the CMT exams, what I did was I would read a chapter of one of those books, and then I would bring up a bunch of charts. I was working at Bloomberg at the time, so I brought up the Bloomberg charts and would just start analyzing the S&P, the NASDAQ, the Dow, the US dollar, crude oil, gold, sectors like technology and energy and financials, and mega cap stocks like Walmart and ExxonMobil and Microsoft. And I learned a great deal by analyzing those charts and just taking what I'd learned and applying them. That's when you really start to internalize it and the information becomes your own. It's not just something you're not just observing John Murphy analyzing the markets. You're actually putting on your John Murphy hat if you have one, and actually putting your analysis into practice. A couple comments, looking at the charts, a couple suggestions I would have for you as you're doing this. What I have always encouraged people is to think of charts not as a painting, not as a something you would hang on the wall, something you want to keep pretty clean and pristine. Think of charts as your ongoing conversation with the market. So this is my actual daily chart of the S&P 500. You can see the levels that I think are important. You can see when we've had drawdowns last year, how I noted those by looking at the percent drops, just to thinking about how they compared to each other. You can see when we had minor support and resistance levels, because I'll put a little horizontal line there. You can see when I think a level became more significant because I turned it into a shaded area with different colors, which helps me remember the importance of those key levels. And what all of that does is, as the markets shift, I can always look back and see what I was thinking at a particular point in time. I can see what levels were important to me. I can see what lines I drew, and I really try not to delete anything on this particular chart. This is my ongoing conversation with the S&P 500 that's been going on for a number of years now. So I would encourage you to think about your charts as a dialogue with the markets. Think of them as a workbook. So while you should be keeping a trading journal and keeping track of all your buy and sell decisions and what motivated them, why you made a certain decision at a certain time, you should also use the charts as a visual way of collecting your thinking and understanding and logging your analysis. You can also use comments. So like on StockCharts, there's a text tool, so you can put notes in here and say, here's what I was thinking. And I'd encourage you to do that. I actually don't do that on these charts because I show them on StockCharts TV all the time, and so I don't want to clutter them too much. This is about as bad as as busy as I get. But on the charts that I don't show on the air, that I don't show in videos, I have a lot of comments like this where I actually put trades directly on the chart and identify key levels and what I was thinking at a certain point. So my point there is to use the charts as a dialogue. The other thing is, depending on what you use for charting, I use StockCharts primarily at this point, is use something like a chart list. You probably have a way of aggregating charts into a folder or into a list of ideas, and I've often found that to be really, really helpful. So for example, this is a list of stocks and ETFs related to esports and video games. Here's a list of recent IPOs. Purple Haze list is a list of cannabis and related stocks. These names are electric vehicle names, and the idea is I can then aggregate ETFs and individual stocks that have exposure to that theme, and I can save all of my thinking in that particular space. So by putting notes directly on the charts, by grouping the charts in a meaningful way, even having watch lists and idea lists, and grouping those charts in a particular space, you have the information, you have your thinking logged on the chart, you have the charts grouped in a meaningful way, so you can always go back and reflect on particular ideas. The third thing I would say relative to this is, I basically, anytime I screen for stocks, and I often screen for stocks making new swing highs or new lows. This was during March, April of 2020. I had a screen called Correction Long Ideas based on price returns and based on relative strength. So I ran those screens, put notes on the charts, and then saved them. And now I can go back and see, for a particular historical period, what was my toolkit telling me about the markets? What was it telling me about these particular stocks? Where did I see an opportunity, and what has happened since then, right? And actually go back and reflect on your performance. So, step 2 is to apply. Actually analyze the markets. Take what you read and apply them to the markets. This has nothing to do with telling anyone else about it. That's the third step, so don't do that yet. This is not go on Twitter and start banging charts out to everyone. I think people tend to be a little quick with that. What I would do is start with reading the toolkit, learning it. Step 2, applying it and getting your own toolkit optimized, because you won't use everything in the technical toolkit. You will refine it based on your particular point of view and your horizon, your investment horizon, and how you're trying to play the game. And so you want to get comfortable with your own analysis and learn some of those mistakes just by yourself. Then you get to that third step, which is to share, right? Once you have analyzed the markets, once you have learned about the technical toolkit and applied them in your own practice, start to share with others. And I recommended to people years ago. I remember 10, 15 years ago, this was before social media was the same that it certainly is now, but it was certainly when blogs were a thing. I would tell people, start a blog. It's free. You can do it in a number of different places. And basically just set up a blog. And even if you never share the blog address with anyone else, just use it as a way to collect your thinking at particular periods of time. Share it with yourself. And then when you get comfortable, start sharing that with others. And I encourage people to do that, because when they would apply for a job in an investment firm, point people to your blog, say, here's what I've been thinking over the last couple of years. And you can actually see people's investment process, and learn what they were thinking and how they learned from their mistakes. Now with social media, with Twitter, with Facebook, with Instagram, with wherever you're going to be sharing charts, and Twitter is certainly a primary place I would recommend you take a shot at it. What's really cool is two things. Number one, you can share your insights with others and you can gather feedback, and I'll warn you, feedback can be swift and brutal if you do something incorrectly, but you're certainly going to learn from it. I would approach it as a learning opportunity, but you could also learn from experts. And I would say, remember, sharing is a two-way street. Don't just think of sharing it as, now I have a lot of really important ideas I now need to get out there. That's important, and gathering some feedback on that is helpful, but also learn from other experts that are sharing their own expertise and sharing their charts, and see what they're doing. How are they, when Russia attacks Ukraine, when the Federal Reserve starts raising rates, when energy stocks spike and oil prices go up, what are analysts and strategists that you follow, what are they looking at, what are they sharing, and start to incorporate those, internalize those lessons, and try to incorporate them into what you're doing. Two things I would say about this one, by the way. When you're learning about technical analysis, I would say on social media, on Twitter, for example, and you're welcome to follow me at DKellerCMT. There are a lot of people like me who have been analyzing the markets using technical analysis for a long period of time and are able to share what we're seeing and what we're hearing. And I would follow some of the seasoned practitioners. One of my favorites would be someone like Walter Deemer, who ran the technical research team at Putnam Investments in the 1970s. Talk about someone who had firsthand experience during a completely different market that I did not firsthand experience. That's such a great opportunity to learn. Helen Meisler, right, who still writes every day on social media and has written for TheStreet.com for a number of years. A fantastic market strategist, really knowledgeable practitioner. Follow people like that. Sam Stovall, who is an expert in sector rotation, and so many others. But I would also tell you that there are places to read content. So on StockCharts, we have an articles page, which is free, where you get practitioners like John Murphy and Martin Pring, Mish Schneider, Aaron Swenlin, myself, Tom Foley, others, all sort of writing commentary on the market. That information is out there. And while it's great to see what individual practitioners are seeing and what they're hearing, I've always learned there's so much to be gained by talking to people who have been doing this a long period of time. There's a great amount of value in just the experience of having seen different market cycles. And while this particular market cycle is unique because of its unique combination of factors, I would tell you the idea of investor behavior and people panicking and getting excited and getting desperate and euphoric and all of those emotions in between are completely consistent. And there's a lot to be gained by following those trends in human behavior over time. And that's what these long-term practitioners have demonstrated their ability to do. Also, I will shameless plug pitch StockCharts TV. So I host the Closing Bell show on StockCharts TV every day at 4 p.m. Eastern, and again, it's free and streaming through StockCharts.com. And not to say these are the only places to learn technical analysis. There are a lot of places you can draw from those that have been doing this for a number of years and have a lot of expertise to share. The other thing I will tell you though is that particularly with social media, when you're sharing content, one of the great things about social media and one of the most impressive things about having now used social media for a number of years in different formats, I will tell you the whole idea of liking content, of flagging content, of acknowledging that you appreciate a particular thing is ingenious, and how it refines your experience so that over time, very quickly, everyone's experience on social media is customized to themselves. It's pretty awesome. That's actually really cool, and it's a great way to refine, instead of just seeing a shotgun of all sorts of different stuff, you're seeing more and more what you're interested in, or what you're telling the algorithm that you're interested in. Here's a problem though for your investment process and your journey of learning technical analysis. Every time you like something, you are teaching Twitter or Facebook or whatever what types of things you like. So if you look at my Twitter feed, having liked a bunch of content over a number of years, it is a very it's a group of growth-oriented, technically oriented investors. I follow a lot of people that use a lot of charts, so I don't really follow people that don't use charts because that's not what I'm paying attention to. As a result, I'm losing the ability to learn from people that are not practicing the same set of tools that I am. I have learned over my career, I've learned the most from people that are looking at things completely differently. I never trade options, but I've learned a ton talking to options investors about how they manage risks and versus returns and how they think about bet sizing. I've learned a ton from quantitative investors that are not technically oriented, that don't really understand technical analysis, but understand the concepts of price momentum, and talking about the different ways that they measure performance and measure price momentum, and try to align that with other inputs like fundamental factors and macroeconomic factors. I've learned a great deal from macro strategists that are not looking at investor sentiment or psychology, but are looking more about geopolitical issues and policy issues and economic data, because then I can relate what I'm seeing in the charts to what they are seeing elsewhere. The problem with social media is you have to put in a lot of effort to find people that have a different toolkit than you and to find people that disagree with you. And here's my final suggestion as you're learning technical analysis. If you are analyzing Bitcoin and you are incredibly bullish after analyzing the chart of Bitcoin, I'm not recommending that's the case necessarily right now, but let's assume that that's what you're seeing. What I would encourage you to do is go onto Twitter or wherever you look for, for social interactions online, and actively look for people that have a different point of view. If you're bullish on Bitcoin, search on the keywords bearish and Bitcoin, or Bitcoin down, or Bitcoin with some negative target, and see what comes up, because you will find people that are coming to a different opinion than you. What you don't want to do is turn social media into an echo chamber, which is what it's designed to do, to help reinforce what you think and what you like and what you're interested in. You want to draw on people that have a different toolkit, people that are coming to a different conclusion, because you want to see why that's the case. So I would encourage you to use social media more actively and less passively, and you will find that it can add a great deal to your process. So that's it. How to learn technical analysis. This is basically a high-level overview, and I hope to follow each of those 3 steps in more detail on this channel and elsewhere. But step 1 is to read, learn the toolkit. And there are resources like my recommended reading list, which can point you to the places, sort of the market wisdom of practitioners that have come before us. Learn the lessons that they learned, learn why they created the technical toolkit that we take for granted now, and how human behavior is truly consistent. Number 2, apply. Take what you read and hear about and apply it. You don't have to worry about sharing this with others. Just worry about analyzing it yourself and learning from that process, right? Analyze the markets. Take potentially trades or put your insights, log them somewhere in a journal or on the individual charts, and actually look and see how your calls are playing out. Are you getting things right or not? And see how you need to refine your toolkit and your approach to adapt for that. Number 3, share. Once you sort of have comfortable, you have your feet under you in terms of analyzing the market, start sharing that with others. And remember, that is a dialogue. That's a two-way street. Number 1, share your ideas with others and welcome feedback when you can. The other thing, though, is to consume some of the expertise that's out there, right? Draw on people that are able to share information and their expertise, their toolkits with you, and learn what you can from them, and hope to internalize some of their lessons learned over a successful career. That's the video on how to learn technical analysis. My recommended reading list is in the description below. I'd hope that if you found this sort of thinking helpful, and if you want to continue to learn technical analysis through my YouTube channel, subscribe. It's a great way to keep some of these lessons circulating in front of you regularly. Also, give the video a thumbs up if you appreciate it. We'd very much appreciate that back. Finally, put a comment below. How have you found it most helpful to learn technical analysis? Let me know in the comments. For Market Misbehavior, I'm Dave Keller. Stay safe, be well. Talk to you soon.